Hello, Oracles. Well, what can we expect from the market this week, the week of December 9th, 2024? So, this week we're going to be getting the CPI and PPI data that's going to be coming out to let us know what inflation looked like in the month of November. Now, don't forget, we've been talking about how the Fed has been focusing more on unemployment because unemployment was kind of creeping back up while inflation was pretty much suppressed. Now that the Fed has started cutting rates, inflation has kind of become sticky and it hasn't continued to go down. And it's actually showing signs of maybe popping back up a little bit, especially with talks about tariffs potentially coming out when Trump takes over. There's some concerns about inflation rearing its ugly head again. So the question for the Fed's going to be, well, do we cut rates another 25 basis points, allowing inflation to perhaps come back up again? Or do we leave it flat right now and hope that maybe the unemployment data that we've been getting that shows that it hasn't been too bad over the last month or two is actually going to continue coming down or stay steady at that 4 to 4.5%? So that's going to be the real question for the Fed. And we're going to be getting the next FOMC meeting in 2 weeks on the 18th. So that will let us know what the Fed is going to be deciding on. Now, the market right now seems to be pricing in no rate cut at all. So if we do get a rate cut, then the question is going to be, well, how is the market going to react to that? Because previously, we figured, hey, rate cuts are coming. That's how the market's going to react. It's going to react very well. But now, if we've got inflation kind of rearing its ugly head again, and the Fed's going to cut rates, is that going to give the market a pause for concern? So, those are really the things that we're going to be paying attention to this week. And looking at the expectations, on Wednesday, we get the CPI data coming out. And last month, we had a 0.2%. We're looking at an increase to a 0.3% this month. And year over year, we're also looking at a 0.1% increase over last month, going from a 2.6% to a 2.7%. Now, core month over month seems to be flat as far as expectations go, and then even coming down that 0.1% from a 3.3% to a 3.2%. So, core coming down is a good sign, but the headline going up could be a concern. So, again, just something that the market's going to be paying attention to this week as we're finishing off the year. Now, on Thursday, we're also going to get the PPI data. That's the Producer Price Index. Now, we don't have full forecasts for all of this as of right now, but month over month, we are looking at a 0.2% and an expectation of a 0.2% as well from last month. So, looking at these numbers here, these are kind of an indicator as to what we can see in the market when it comes to CPI. Seems to be a leading indicator because these are all the prices that basically the middlemen are paying. And then from there, are they going to be raising their prices or are they going to absorb some of that cost themselves? And that'll let us know what's going on for the next month when it comes to CPI. Now, it doesn't always relate like that, but typically it does give us a little bit of a leading indicator for the next month's CPI and inflation. So again, the thought basis behind what Trump is going to be potentially doing when it comes to the tariffs is his intention is to raise tariffs for countries outside of the US, especially ones that aren't willing to play ball with us and do as we ask. So we're going to be raising those tariffs. And the problem with that is, from a historical standpoint, when you're looking at tariffs like that, the intention is that, okay, well, we're going to have more US based manufacturing and we're going to bring a lot of jobs back to the US, which it will end up doing. But it's not like the US manufacturers are going to keep those prices low. Think about over your lifetime. I just know from my experience, US made stuff typically was more expensive than the Chinese made stuff. So why is that the case? And of course, it all comes down to costs. The cost of production is significantly lower. If you include transport and everything in there, it's still significantly lower overseas. So now we start bringing that to the US. So if people buy more US made stuff, that's great. If we can get the production volume up a lot, then perhaps we could bring down the prices. But if the tariffs are going to be going up as high as they are, then a lot of US manufacturers were just going to be matching those prices of all the foreign made stuff. Now, still not a bad thing because at the end of the day, if you have a choice to buy a US made product or a Chinese made product of the same price, chances are you're going to be buying a US made product. You guys can let me know your thoughts in the comments below on that. But typically here in the US, that is the mentality is we would do that. We would buy the US made product because we feel that that is a better made product over here. And we're going to be buying it for the same price as the Chinese made product. So now again, we could debate that all day long, whether it's actually better or not. But that's the mentality here in the US for the most part. And so whether that means that inflation is actually going to go up because of this, I don't know. It could just mean that the US made product is going to be selling at a premium and maybe it goes up a little bit, but not too much. We just have to see how that's all going to play out. Now, don't forget, if we end up having a lot more jobs here in the US as well, that's going to boost GDP also. That's going to stimulate the economy. So is this going to happen immediately? No, it's going to take some time. So when we come to those recession talks again for next year, they're still on the table, of course. They're not going to come off the table until we actually get through all of this and we can see that we've made it past all of the uncertainty in the market. But that's going to be one of those things where maybe we end up getting that little bit of a lull and the dip first and then come out of it even stronger on the other side. That, of course, is the intention. Whether it's going to play out that way or not, we shall have to wait and see. The other thing to pay attention to in the market is potential tax loss harvesting. Now, we talked about that last week, didn't really see much. The market kept on just pushing up and up and up. It just continues to keep on climbing. So, will we just keep going up from here? We shall have to wait and see on that one. But there's a lot of talks out there between a lot of investors, a lot of people on CNBC who are talking about, hey, after the first of the year, there's going to potentially be a lot of that selling off going on because of the uncertainty coming up with Trump taking over presidency. Not sure what's going to be happening going forward. So it could be very beginning of the year, beginning of January, that we see a lot of that selling off going. So we may end up continuing to push through and up through the end of this year. So again, there's to me still so much uncertainty. I'm just playing my whole entire strategy as I normally do. I'm continuing to consolidate as it is. I have already cut down another 3 positions in my portfolio, adding more and more to my cash stockpile, building up that cash flow as well. That's really going to be my big focus going into next year is just cash flow and having that cash stockpile put aside to take advantage of any opportunities. Warren Buffett is doing the same thing. I'm clearly significantly far behind him when he has $325 billion in cash on the sidelines. For me, I'm just doing it as a small part. And a smaller investor, you don't need to rely a lot on that cash as much. Just being invested in dollar cost averaging is more important. Cash flow is realistically more important than anything. But I also want to have a cash stockpile aside for, hey, bigger opportunities to be able to add more money at the market, or God forbid something happens to me in my job. I want to be able to have some extra cash elsewhere. I have lots of little nuggets of cash stored away in different areas, but this little bit here can add as a little buffer and a safety net just in case I need to tap into some more reserves. So I've got that cash sitting on the sidelines as well, just kind of waiting to see what's going to happen for next year and going forward. So these are just the things that I'm paying attention to. This is the way I'm preparing for it. I hope you guys are enjoying the holiday season as it is so far. Let me know in the comments below what holidays you guys celebrate this time of year. Let me know what countries you guys are from. It's so good to hear from all of you, and we'll see what's going to be happening with the market. Let me know your thoughts in the comments as well, as far as how do you think the market feels about inflation? Do you think that they're afraid that it's going to be coming back? Do you think that higher inflation may end up causing the Fed to pause the rates? What are your thoughts? Let me know in the comments below. Otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.